Hi, today is June the 14th. It is about 6 o'clock a.m. Eastern, and this is the SPX outlook for the coming week. This week will be probably quite intense because we have the VIX future, the June future expiring tomorrow at the close, settlement Wednesday morning. Wednesday, 2 o'clock, we have the FOMC with probably some news, even though the market seems to be looking at the Fed as being dovish again, and there can be all sorts of reasons. It could be that the disruption of supply chains is still not sorted. It could be that inflation is transitory or transient. I don't know. Or it could be, well, we need to delay whatever shock to the market because the geopolitical tension with China is only going to build up. So let's not send the wrong signals to the market. So it looks like the market is bullish and it's going to stay bullish. It is a little bit disconcerting for market neutral traders, but we have ways to deal with this. We see the 4-hour chart with the market bouncing off 42.20 on several occasions. It is hitting a 42.60, which is technically the next resistance. If I go for a faster, you will see that on this one, no. Well, actually, it's not so bad. I mean, it looks like the subcurrents resistance, and generally when the market has been bullish for a long time, we tend to look a larger look back period. So that's why 3, which is 120 bars or more, is probably more suitable. In any case, 42.60 is likely to be the next resistance. It almost hit it in pre-market this morning, and we have from here, from this fib expansion pattern, we even have a target that is slightly above. So yes, the market could still be running up. The trade volumes are very low. Friday we had only 3.2 billion shares traded, which is very low. VIX may, however, have reached a bottom. If you see, we've got some support here about around 1550. And if it breaks, the next one will be about 1250. So we will see whether the market bounces back. At the moment, pre-market 1602. So back to SPX. I would say in a preemption for the coming FOMC, the market should normally drift down a little. But will it go lower than 42.20? There's no indication of that right now. If we look at the SPX returns distribution, we don't see any elliptokurtic indication, so we can't see from a statistical point of view the emergence of fat tails or a large correction coming anytime soon. Of course, it can still surprise us, but statistics are only statistics. It can still happen randomly. So at this point, I would say the market may use 42.20 as a mid-range pivot, and we probably would see that on shorter time frames, and the market would then be more comfortable north of that line. If we look now at the daily chart, we see the bullishness is still intact, although as you can see here, volumes are pretty low. We would probably need a strong sell-off on a large volume bar to really see the market really changing turn, and that can happen after the FOMC. Let's not forget that generally the reaction on FOMC Wednesday afternoon, and quite commonly a compensation or opposite reaction the day before. So it can be, along with quadruple witching, lots of rollover activities, it could be quite an eventful week, even though it looks like we're still in that bullish slumber. Now for today, one-day chart, here we see that on this long type of SR, support resistance lines, we're still above but hasn't broken. Market could test it once again. And here on this time frame, if I go for a faster one, we see that the lines are moving up, so giving this 42.60 a pivot status, and the market could even go up to nearly 4300. So this is still bullish, going with the flow. No major reaction is expected, but normally the market should drift down ahead of FOMC. Okay, that is it for now. Next video will be on current trades. Thank you for watching, and bye for now.